Hello, friends. Let's talk about NVIDIA today. NVIDIA is such an important company for the entire AI trade. And if we can understand NVIDIA, if we can understand what this company is doing, we can have a little bit more visibility into what the rest of the year will look like for AI trade. And I think it's important to look at NVIDIA because a lot of stocks in the AI trade has gone parabolic. Many stocks that we discuss in our Discord group has gone up 100%, 200%, some even 300% over the last month or two. So it has been incredible journey. But the now question remains is, should we book profits or should we get out of those trades? What does AI ecosystem looks like? Where can we see these stocks be, 3 months, 6 months down the road? But more importantly, what about NVIDIA? Why is NVIDIA not moving? Now, there's some reasons are obvious. For example, reason number one could be that, hey, NVIDIA is already a $5 trillion company. Can it really become $10 trillion company? And because a lot of people might be doubtful, so they're going to put on sideline. So that's one easy one. The second reason NVIDIA might not be moving is people are thinking, well, most of their earnings come from Hyperscaler. They have already increased the spending so much. Can they really increase it any further or the rest of the 2026, 27, and 28? So because that is, reasonable assumption that maybe the hyperscalers don't want to do that. So maybe they sit on sideline going forward. Similarly, another thing could be is what about the margin? Because we know that a lot of cost has gone up. For example, memory cost is up quite a bit and all the other things has gone up a lot. So maybe the NVIDIA is going to suffer from margins and maybe the profitability will come down. And another reason I think NVIDIA might not be moving right now is because everybody is moving with momentum. They are looking for the next shining star. They want to find the next opportunity. So they're saying, hey, let's ignore NVIDIA and let's try to find something else. So those are some of the forces that I see playing out in the market. But those are typically temporary things. If we want to better understand what NVIDIA is going to do over the next couple of years, then we need to dig a little bit deeper. That is exactly what I'm going to do with you. Now, once I dig deeper into NVIDIA, not just that it will help you understand NVIDIA, but it's going to also help you understand the rest of the trade. So my apologies, this video is going to be a little bit longer, but I think you can listen to it while you're driving, share it with friends, family members, because I think they're going to add a lot of value out of this video. So it's worth it. Now, do me a favor and at least like the video. If you like the content, put a couple of comments. What did you learn? What did you like? What you dislike? That would help me a lot. Subscribe to the channel. But most importantly, come see me in person. So if you don't already know me, you have never met me in person, then I encourage you to come see me in person. I will be in Bay Area first week of June. So I'll put up a link for that meetup in our WhatsApp group. If you are not part of the WhatsApp group, just go to taxcodeadvisors.com and reach out to me from there. I'll be happy to add you to the WhatsApp group. So come see me in person because we can talk about this stuff in person that day. And by the way, on that note, I will also be doing a webinar with Sanjeev Gupta CPA at the end of this month in May 2026. I think May 30th to be exact. And that webinar is on mid-year tax planning. So just in case you're interested in what we can do for your taxes, then join that webinar. That's going to be on May 30th. All right. One important note before I forget. I'm not an investment advisor, so I'm not here to tell you to buy or sell NVIDIA, okay? Don't do that. Use this information for educational purposes only and see if you can come up with your own thesis, arrive at your own conclusion. All right, now that we got all of that out of the way, let's talk about NVIDIA. Like I said, it's going to be a little bit longer video, but it's going to be very worth it because I think there's so many hidden gems in the last ER that many people are missing. NVIDIA's latest earning report may ultimately be remembered as one of the most important moments in the history of AI. In matter of fact, we might come back 5 years down the road and re-look at 2026. It's that big. Not because NVIDIA is beating earnings expectation, not because revenue is exploding, not because stock price has moved from $160 to $220, but because this quarter reveals something much larger happening underneath the surface. NVIDIA is no longer behaving like a semiconductor company. Forget that. It is increasingly behaving like a foundational infrastructure for the AI economy itself. And after listening carefully to the last earnings call, I think Wall Street still does not fully understand the scale of what is unfolding. Because NVIDIA is no longer just selling GPUs. It is building AI factories, operating systems, infrastructure, networking, compute standards, deployment ecosystems, and potentially the economic backbone of the next computing era. Think about Microsoft and how Microsoft got embedded into every single computer. NVIDIA is about to do the same, just at a magnitude of 10x. So stay with me, try to understand it. I'm going to break down exactly what happened in this quarter and why this earning call may end up being one of the defining moments of the AI revolution. So let's begin with the obvious, the financial results. We already know that, so I'm not going to spend too much time, but it's important to understand. Revenue came in at roughly $82 billion for a quarter, 85% year over year, and 20% over the last quarter. Now, pause for a second and think about that. NVIDIA added about $13.5 billion in quarterly revenue in 3 months only. $13.5 billion. If I were to set up a startup and that came up with $13.5 billion, how are you going to rate it? How does my stock will behave? See, the incremental growth alone would qualify NVIDIA as a major semiconductor company, not the entire company, just that growth. Free cash flow came in nearly $49 billion. That means they have $49 billion just in one quarter to buy whatever they want to buy, to invest in any way they like. Margins are sitting at 75%, and NVIDIA returned over $20 billion to shareholders in a single quarter through aggressive buybacks. These are not normal semiconductor company economics anymore. These are infrastructure platform economics. These are monopoly scale economics. But the most important part of this quarter was not the revenue number at all. It was the message. Because Jensen Huang made something extremely clear during this earnings call. The economy of AI has crossed a major threshold. And that's why you see a lot of stocks running up. Jensen said that tokens are now profitable. That statement changes everything. For the past 2 years, critics argued that hyperscalers were overspending on AI infrastructure without clear monetization. In matter of fact, if you listen to a lot of gurus on CNBC, maybe on Twitter or wherever else you get a lot of news, you might still hear this message, or too much spending, too much spending. But Jensen is telling us that AI CapEx is now sustainable. It's telling us that returns are certain and compute demand is even bigger than before. AI inference is generating real economic returns. Compute itself has become a revenue generating infrastructure. Jensen reinforced this with another massive statement. He said, compute is the revenue, compute is profit. That is complete shift in cloud economics. Historically, compute was a cost center. Compute is becoming the direct engine of monetization itself. That means hyperscalers are not scaling infrastructure simply because they hope AI becomes valuable someday. They're scaling because AI workloads are already generating economics returns now. And that may be the strongest rebuttal yet to the AI bubble argument. One thing became very clear throughout this call. NVIDIA no longer wants investors to think about it as a chip company. Instead, management repeatedly used phrases like AI factories, AI infrastructure, full stack systems, integrated platforms, token generation economics. Jensen said something incredibly important. He said, customers do not buy GPUs. They build AI factories. Now, he's not talking about my customers. He's talking about his customers. He's saying, look, they're not buying GPUs. They're building AI factories. That framing matters. See, factories produce output. Factories generate revenue. Factories are infrastructure assets. That is very different valuation framework than semiconductor. NVIDIA is attempting to reposition itself from cyclical hardware vendor into foundational industrial infrastructure. And honestly, looks like they are succeeding. Let's talk about data center because that's a big story for this year. Data center revenue reached approximately $75 billion, up more than 90% year over year. Blackwell demand remains explosive. Management said frontier model companies and hyperscalers have already deployed hundreds of thousands of Blackwell GPUs. GB300 is now the fastest product ramp in NVIDIA's history. And importantly, there was absolutely no sign of slowing down. None. In matter of fact, management guided another massive quarter ahead. And perhaps one of the most bullish hidden signal from the call was this: GPU rental pricing is still rising. Management disclosed that H100 rental prices have increased roughly 20% year to date. Now, that is remarkable. Normally, infrastructure pricing declines over time, but AI compute pricing is still increasing, which tells you demand still exceeds supply, utilization rates remain extremely high, AI workloads remains economically attractive. This is not what collapsing infrastructure demand looks like. Now, let's discuss what may have been the most strategic move of the quarter. NVIDIA changed how it reports data center revenue. Companies split data center revenue into two categories. First, hyperscale. Second, ACIE, AI clouds, industrial, and enterprise. At first glance, this looks like a simple accounting change. It's not. This was extremely strategic because for years, one of the biggest concerns surrounding NVIDIA was hyperscaler concentration risk. The argument was simple. If Microsoft, Amazon, Meta, or Google slow spending, NVIDIA gets hit. But NVIDIA is now showing investors something extremely important. The ACIE business is already nearly, listen to this, as large as hyperscalers itself. And more importantly, it is growing faster. That tells us something profound. The AI boom is no longer confined to hyperscaler. It is spreading outwards into enterprises, factories, industrial systems, sovereign AI, robotics, autonomous infrastructure, AI native cloud providers, edge computing. This may become the next massive wave of AI expansion. Look into these categories. Try to find companies in these categories. Jensen repeatedly hinted that his second category, I'm talking about this AI, ACIE, could eventually become larger than hyperscale itself. Why? Because hyperscalers are still fundamentally part of the technology economy. But the second category represents the physical economy: manufacturing, healthcare, energy, industrial systems, transportation, national infrastructure. Jensen made one of the biggest macro statement of the call when he said, rest of the 100 trillion industry that has not been impacted by IT in the last 30 years is about to be impacted by AI. $100 trillion industry has not been impacted by IT in the last 30 years is about to be impacted by AI. That is enormous because NVIDIA is no longer describing AI as software enhancement. They are describing AI as industrial transformation. That is much larger opportunity than cloud computing ever was. The real moat is not the GPU. Most investor thinks NVIDIA moat is GPU performance. That is no longer true. The real moat is economics and ecosystem integration. Management repeatedly emphasized cost per token, uptime, utilization, software durability, deployment optimization, networking integration, financial support, orchestration efficiency. NVIDIA is shifting the conversation away from who has the fastest chip towards who has the most efficient AI factory. That is much harder to compete against because competitors may eventually build stronger chips, but replicating CUDA, networking, storage, orchestration, all this stuff is very difficult. Jensen said, NVIDIA is the only company that builds all of the technology components. Now, that's a big statement. This is becoming much larger than semiconductors. NVIDIA increasingly resembles Amazon, Cisco, VMware, Oracle, Intel. You take all of these great companies, combine it into one AI infrastructure stack. Networking absolutely exploded this quarter. Data center networking revenue reached roughly $15 billion. InfiniBand grew more than 4 times year over year. Spectrum X is now larger than all Ethernet networking competitors combined. That is astonishing because networking increasingly determines inference efficiency, latency, token throughput, AI factory performance. This is why NVIDIA's moat keeps expanding. The company isn't just controlling compute anymore. It is increasingly controlling the interconnect layer of AI infrastructure itself. And that becomes extraordinarily difficult to replace. Now, let's discuss perhaps one of the most underappreciated development from the earnings call, the CPU business. Jensen revealed NVIDIA now sees nearly $20 billion in standalone Vera CPU revenue. Standalone, not bundle system, not attached CPU product, pure CPU revenue. And then Jensen made even more aggressive statement. He said, NVIDIA expects to become the world's leading CPU supplier. That is a direct challenge to Intel, AMD, traditional 86 computing. But NVIDIA isn't approaching CPUs like traditional enterprise computing companies. These CPUs are specifically designed for agentic AI, orchestration, inference systems, AI infrastructure. And Jensen explained why this matters. He said something incredibly important. The world has 1 billion users, but eventually there could be billions of AI agents. Think carefully about what that means. It means future compute demand may no longer scale with humans. It may scale with autonomous software systems interacting continuously with each other, machine to machine economics, persistence inference, autonomous workflows, AI agents generating sub agents. That changes the scale of compute demand dramatically. And it explains why NVIDIA is aggressively expanding into the categories I discussed: CPUs, networking, storage, orchestration, security, confidential computing, because the company is building infrastructure for the world where software itself becomes autonomous. Another thing Wall Street still underestimates is physical AI. Jensen repeatedly returned to robotics, autonomous vehicles, humanoid systems, industrial robotics, AI powered manufacturing, IRAN infrastructure, embedded AI systems. And this matters because Wall Street still primarily values NVIDIA as a cloud AI company. But Jensen increasingly talks like NVIDIA is building infrastructure for autonomous machines operating in the physical world. That is much larger because eventually factories, robots, logistics systems, transportation networks, medical devices, industrial infrastructure could all become AI driven systems. This may become one of the largest industrial transformation in history. Another major theme from the call was that NVIDIA is increasingly becoming the interoperability layer for AI itself. Jensen repeatedly referenced OpenAI, Anthropic, XAI, Meta, Gemini, Cursor, Perplexity, sovereign AI providers, enterprise AI deployments, and emphasized that NVIDIA is the only platform that runs every frontier AI model. That is critically important because the company is becoming the default AI standard, the AI operating layer, the universal AI deployment architecture. Okay, so maybe those are big words. Think of it like Windows in PCs. Think of it like Android in mobile or AWS in cloud. And the deeper customers integrate into NVIDIA ecosystem, the harder it becomes for them to leave. One of the most overlooked signals in the quarter was that NVIDIA disclosed roughly $145 billion in supply commitments. This is huge. These are not the actions of a company reacting to temporary demand. These are actions for a company with years of visibility. I mean, why would a company spend $145 billion? NVIDIA is effectively locking down manufacturing capacity, supplier ecosystem, infrastructure availability at unprecedented scale. This dramatically increases barriers to entry because competitors cannot easily replicate supplier relationships, manufacturing scale, ecosystem coordination. And it suggests NVIDIA sees sustained demand for many, many years. NVIDIA also revealed its AI infrastructure is now deployed across nearly 40 countries, representing roughly $50 trillion in GDP. That is huge because it means AI infrastructure is becoming geopolitically strategic. Countries are beginning to treat AI infrastructure the way they once treated energy infrastructure, telecom infrastructure, manufacturing capacity. This creates an entirely different kind of demand cycle. one driven not only by economics, but by national competitiveness. And that could become an enormous long duration growth driver for NVIDIA. Management stated AI infrastructure spending could eventually reach $3 to $4 trillion annually. Pause for a second and think about that. That would make AI infrastructure one of the largest infrastructure built out in modern history. NVIDIA today is a $5 trillion company. That's the market cap, maybe a little bit more than that. You can double check it. And here NVIDIA is telling the annual spending will reach $3 to $4 trillion. So just think about that. NVIDIA increasingly sits at the center of this entire build out. Now, you may think, oh my God, this is a huge opportunity. Wait, I have more. Once again, want to remind you guys, if you like what I'm sharing with you guys, then please at least give this video a like, subscribe to the channel, and put a couple of comments. And let's get back to what you might be missing. Rubin. Management made it extremely clear. Production begins in Q3 for Rubin. Deployments continues through Q4. And next year could be enormous, not my words, NVIDIA's words. And importantly, customers already have purchase orders in place. They are deployment ready. Jensen even stated that essentially every frontier model company is expected to adopt Rubin almost immediately. This is a huge signal because it suggests ecosystem lock-in is accelerating. Customers are standardizing earlier, transition risk is minimum, NVIDIA's upgrade cycles are shortening. This is a very powerful competitive position. So, what's the final takeaway from NVIDIA? Look, this is not just a strong quarter. It reveals something much larger. NVIDIA is simultaneously becoming AI compute standard, AI networking layer, AI infrastructure platform, AI orchestration layer, AI deployment ecosystem, AI factory architecture, AI operating system, and perhaps most importantly, the economics of AI infrastructure now appears very real, very profitable, very durable, and most importantly, still accelerating. Because as Jensen Huang made very clear during these earning calls, agentic AI has arrived, and NVIDIA built itself for this exact moment. This quarter may ultimately be remembered at the moment NVIDIA stopped being viewed as a semiconductor company and started being viewed as an industrial backbone of the AI company itself. Look, I think many of you guys probably missed out on NVIDIA, but don't make the same mistake again. Study what I'm sharing with you. Do the fact check. Take this information, run it to your favorite AI model, check the earnings report, and try to question this thesis. Maybe there's something wrong here. Maybe it doesn't add up. But NVIDIA can do what AMD just did in last 1 year. Now, I'm not saying NVIDIA going to 5x in 1 year. I'm not saying that. What I mean is people will start to realize that NVIDIA still has so much more power left, and that power is going to continue for many, many years. So I hope you find this information helpful, and hopefully I added a point or two to enhance your fundamental thesis of NVIDIA. But if you still want to debate it, then come see me in person. So I will be in Bay Area on the first week of June, and we can sit down and talk about this subject matter, or for that matter, anything else that is happening in the market together and try to better understand it. If you need some help, maybe you work for NVIDIA, you work for Microsoft, Meta, you work for one of these high-tech companies struggling with a lot of high-paying taxes, you need a good advisor on your side who can also update you as to what's happening in the industry, then I'm your guy. Reach out to me. We are taxcodeadvisors.com, and I'll see you next time.